Okay, well, joining us now to talk about the fate of CIT Group is Martin Bienenstock, partner at law firm Dewy Leboeuf. And Martin has handled many high-profile restructuring and bankruptcy cases, including Enron, and he also lectures at Harvard Law School. Martin, great to have you with us to get some perspective on all of this. If CIT does indeed get this bridge financing from the bondholders, what's the next step for the company?
Well, the bridge financing is a temporary halt to the death spiral. And the next step has to be to show the public there's a real solution for the long term. Otherwise, the spiral will rekindle itself. Employees, customers, lenders, investors will all flee.
Right, and death spiral you mean by leading to bankruptcy anyway, right?
Yes.
So what do they have to prove to the investors, to the creditors, that they have a viable plan? What do they need to put in place then?
Well, with the Band-Aid, they'll be the walking wounded. And what a viable plan will be to deleverage itself so they won't be in danger of having too much debt, and to show they have a source of capital so they can make new loans.
Mm-hmm. Well, CIT, though, I believe they've got about $10 billion in debt maturing next year. Is there going to be enough out there in the private market to be able to give the company enough capital to survive? Or as some people say, it's a broken business model.
Well, there is enough capital, and they're up against the problem that if you take their assets and you sell them, they'll get a depressed value, whereas if you hold their loans, you'll collect a lot more. The bondholders realize that, and they have an incentive to help raise the capital so things don't have to be fire sold.
Okay. Well, how would you compare this situation, Martin, with the bailout of the auto companies, for instance? You know, they've been comparing, why is the government allowing the bailout for these automakers, but not for CIT?
I think there are really two reasons. The auto companies presented a multiplier effect to the U.S. economy. The jobs not only at Chrysler and GM, but then the supplier jobs, the dealer jobs, the town jobs. You were talking 2.5 million jobs. Mm-hmm. You were talking, for GM alone, a capital commitment of $50 billion. It could not be done. You also had to rescue both. If you let Chrysler fail, it would take down suppliers that would take down GM. So you have to rescue both. That could not be done by the private sector. Here, you can move these customers to other lenders. It would be a shame for CIT to have to dismantle itself, but it could be done without a horrible multiplier effect on the economy.
And yet I heard at the beginning of all of this last week is that if we did see CIT fail, that there would not be other lenders out there to pick up the slack.
I think the answer is that for all the good customers, there likely would be lenders. I mean, they do make the Fed has brought interest rates down to almost zero to recapitalize the banks. It's not that hard to make profitable loans to good borrowers. And the bad borrowers, the argument would go, you should not fund them anymore.
Well, for these clients of CIT, though, if they did have to, in fact, go to other lenders, would there be any type of stigma attached to the fact that they were with CIT? Would they have to pay higher costs because they were associated with CIT?
No, I don't think so. It doesn't say anything about the borrower. There would be a time lag because CIT has liens on many of their assets, and you can't have a new lender come in before the lien on the old assets is given away. Mm-hmm. So you'd have to pay off the old, which would be good for CIT, and then a new lender would take over.
And in terms of these clients, these customers of CIT, I think we've reported one at least who has filed for Chapter 11 because of the fact that he's been associated or has been hurt by CIT. Is there any recourse for them at all at this point?
Well, if they filed because CIT breached a loan commitment, then they're going to have a damage claim, and if CIT survives, the claim will be paid. But if they didn't file because of breach of a contractual commitment, then there probably is no remedy.
There's nothing they could really do about that. Okay. Is there any scenario, Martin, where bankruptcy could be beneficial for the bondholders, or no?
I think bankruptcy would be bad for everyone except the entity or entities that buy the assets at a deep discount. They would make a lot of money.
Okay, Martin, thanks so much for joining us on this and giving some perspective. Martin Bienenstock of law firm Dewy Leboeuf.
Thank you.